Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, Mr. Rehn. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. Incoming information has confirmed our previous assessment. Underlying price pressures in the euro area are expected to remain subdued over the medium term. In keeping with this picture, monetary and in particular credit dynamics remain subdued. Inflation expectations for the euro area continue to be firmly anchored in line with our aim of maintaining inflation rates below but close to 2% over the medium term. At the same time, recent confidence indicators based on survey data have shown some further improvement from low levels. Our monetary policy stance is geared towards maintaining the degree of monetary accommodation warranted by the outlook for price stability and promoting stable money market conditions. It thereby provides support to a recovery in economic activity later in the year and in 2014. Looking ahead, our monetary policy stance will remain accommodative for as long as necessary. The Governing Council expects the key ECB interest rates to remain at present or lower levels for an extended period of time. This expectation is based on the overall subdued outlook for inflation extending into the medium term, given the broad-based weakness in the real economy and subdued monetary dynamics. In the period ahead, we will monitor all incoming information on economic and monetary developments and assess any impact on the outlook for price stability. Let me now explain our assessment in greater detail, starting with the economic analysis. Real GDP declined by 0.3% in the first quarter of 2013, following a contraction of 0.6% in the last quarter of 2012. At the same time, labor market conditions remain weak. Recent developments in cyclical indicators, particularly those based on survey data, indicate some further improvement from low levels. Looking ahead to later in the year and to 2014, euro area export growth should benefit from a gradual recovery in global demand, while domestic demand should be supported by the accommodative monetary policy stance, as well as the recent gains in real income owing to generally lower inflation. Furthermore, notwithstanding recent developments, the overall improvements in financial markets seen since last summer should work their way through to the real economy, as should the progress made in fiscal consolidation. This being said, the remaining necessary balance sheet adjustments in the public and the private sectors will continue to weigh on economic activity. Overall, euro area economic activity should stabilize and recover in the course of the year, albeit at subdued pace. The risk surrounding the economic outlook for the euro area continue to be on the downside. The recent tightening of global money and financial market conditions and related uncertainties may have the potential to negatively affect economic conditions. Other downside risks include the possibility of weaker than expected domestic and global demand and slow or insufficient implementation of structural reforms in euro area countries. As stated in previous months, annual inflation rates are expected to be subject to some volatility throughout the year, owing particularly to base effects. According to Eurostat's flash estimate, Euro area annual HICP inflation was 1.6% in June 2013, up from 1.4% in May. This increase reflected an upward base effect relating to energy price developments 12 months earlier. However, underlying price pressures are expected to remain subdued over the medium term, reflecting the broad-based weakness in aggregate demand and the modest pace of the recovery. Medium-term inflation expectations remain firmly anchored in line with price stability. The risks to the outlook for price developments are expected to be still broadly balanced over the medium term, with upside risks relating to stronger than expected increases in administered prices and indirect taxes, as well as higher commodity prices, and downside risks stemming from weaker than expected economic activity. Turning to the monetary analysis, recent data confirm the subdued monetary and in particular credit dynamics. Annual growth in broad money, M3, decreased in May to 2.9% from 3.2% in April. Moreover, annual growth in M1 decreased to 8.4% in May from 8.7% in April. The annual rate of change of loans to the private sector remained negative, while the annual growth rate of loans to households remained at 0.3% in May, broadly unchanged since the turn of the year. The annual rate of change of loans to non-financial corporations weakened further to -2.1% in May from -1.9% in April. As in April, strong monthly net redemptions in May were concentrated in short-term loans, possibly reflecting reduced demand for working capital against the background of weak order books in early spring. More generally, weak loan dynamics continue to reflect primarily the current stage of the business cycle, heightened credit risk, and the ongoing adjustment of financial and non-financial sector balance sheets. Since the summer of 2012, substantial progress has been made in improving the funding situation of banks, and in particular in strengthening the domestic deposit base in a number of stressed countries. This has contributed to reducing reliance on Eurosystem funding, as reflected in the ongoing repayments of the 3-year longer-term refinancing operations. In order to ensure an adequate transmission of monetary policy to the financing conditions in euro area countries, it's essential that the fragmentation of euro area credit markets continues to decline further, and that the resilience of banks is strengthened where needed. Further decisive steps for establishing a banking union will help to accomplish this objective. In particular, the future single supervisory mechanism and a single resolution mechanism are crucial elements for moving towards reintegrating the banking system and therefore require swift implementation. To sum up, the economic analysis indicates that price developments should remain in line with price stability over the medium term. A cross-check with the signals from the monetary analysis confirms this picture. With regard to other economic policies, the Economic Council notes the initiatives taken by the European Council of 27-28 of June 2013 in the areas of youth unemployment, investment and financing of small and medium-sized enterprises, as well as the European Council's endorsement of the country-specific recommendations of the 2013 European semester. The Governing Council stresses that implementation of these recommendations is essential to contribute to a sustainable recovery in the euro area. Moreover, the new European governance framework for fiscal and economic policies should be applied in a steadfast manner, and much more determined efforts should be pursued to carry forward structural reforms to foster growth and employment. In this respect, the Governing Council deems it particularly important to target competitiveness and adjustment capacities in labour and product markets. Finally, the Governing Council welcomes the setting out of a number of steps towards the completion of the banking union as moves in the right direction, but also urges that they be implemented swiftly. And now we are at your disposal for questions.
CNBC, please.
Thank you very much indeed. Mr. Draghi, as you were meeting, another central bank in London was also having a meeting of its policy members. And in a break with previous tradition, we've had a very clear forward guidance from Mr. Carney, the new governor. I wonder if, because the Bank of England has now changed its style on guidance, it's time for the European Central Bank to also step forward with a new policy on guidance. It's clear from Mr. Carney's comments and the market reaction that he's moved the gilt market, he's moved the sterling curve. Is it time that you put aside the pre-commit barrier to more detailed and specific forward guidance?
Thank you. If you ask this question, you haven't really listened to my statement. The Governing Council...
It sounded a lot like the statement I listened to when I was here in June.
Well, that's why I said you haven't listened carefully. The Governing Council took the unprecedented step to give forward guidance in a rather more specific way than it did ever in the past. It says the Governing Council expects the key, so all interest rates, to remain, the key ECB interest rates, to remain at present or lower levels for an extended period of time. It's the first time the Governing Council says so. And it's just a coincidence, by the way, that with what Mark Carney said in London.
So maybe you can help us out with that. When you say an extended period of time, is that a 12 to 18 month window?
Let's have other questions. It says an extended period of time.
News. Johanna Trick.
Johanna Trick, Market News. Did the Governing Council perhaps discuss during the meeting to offer a more concrete forward guidance, perhaps linking the monetary policy path to certain economic indicators? And in your view, would such a more formal guidance be only really effective once interest rates have hit bottom?
Yes, the answer to your first question is yes. We discussed several forms of forward guidance, and I think the present text says what we will look at in the forward guidance. I can read it again. It says the Governing Council, as I said before, expects the key ECB interest rates, so including the rate on the deposit facility, to remain at present level or present or lower levels for an extended period of time. This expectation is based on the overall subdued look for inflation extending into the medium term, so outlook of inflation in the medium term, given the broad-based weakness in the real economy, so we look at the weakness in the real economy, and the subdued monetary dynamics. So we look at these three, which is basically consistent with our two-pillar strategy. So it's been perfectly consistent with our reaction functions. These are the things we look at. That was the fairly specific forward guidance we have come to. And incidentally, the Governing Council was unanimous on this formulation. Thank you.
Sebastian Joost, Die Welt.
Mr. Draghi, I would have two questions. First, a very short one. Can you give us any update on the consultations regarding the ABS market? And the second one, there were several speculations among economists saying that the OMT program is dead or is limited in its effects because an ESM program that would trigger OMT would never pass the Bundestag. That could lead to the question, does your commitment to do whatever it takes to preserve the euro go beyond the OMT, or is the OMT just the expression of that commitment? Perhaps you could comment on that.
Well, on the ABS, the ECB has now, as of now, an advisory role. As I've said on other occasions, the ECB is part of a task force with EIB. There are several aspects of the ABS that need to be taken care of before this becomes a concrete, realistic possibility, and both institutions are actively working on that. We will see what comes out of this effort, and then we'll make up our mind. On the OMT is ready to be active, is there. The conditions are known, and it's as an effective backstop as ever. You asked another question too? No. Thank you.
Claudio Celani.
Thank you. Claudio Celani from EIR Strategic Alert Service. Mr. Draghi, allow me to ask you one question related to the famous question of the derivatives of the Italian Treasury. Now, disregarding whether you had a role in that and disregarding whether there are 8 billion or 16 billion losses. From the standpoint of the future regulator maximus of the banking union, do you think that it's a prudent practice that national treasuries invest taxpayer monies in derivatives, in gambling bets? Thank you.
Thank you. By the way, regardless of my involvement, I think I should address this. And it's not the first time. Incidentally, you must have covered this bit of news already 3 years ago, 6 years ago, and 9 years ago. As far as the operations that have been carried out when I was there, they've been closed. They've been praised by Eurostat and by the Commission in several public statements they made. They've not embellished the figures because you cannot embellish what is already known. They have already always been communicated, accounted according to the existing regulations at the time, and they've all been made in the interest of the Italian Treasury. I take that any treasurer that acts for in the interest of their country does this operation. This is the only reason why they're made. And it's part, as you could see in the press communique by the Commission at the time, is part of an active management of public debt wherever this is deemed to be so. Having said that, what is absolutely essential is full transparency. I think you had yesterday and today you have the benefit of reading what the Minister of the Economy said in the Italian Parliament. I would refer to that, but I would restate what he said, that absolute transparency and proper accountability are essential. Thank you.
Call it prudential? Would you call it prudential?
When the Treasury retains deemed so, yes. It's insurance. If you, I'll make you an example. If you issue in foreign currency, you want to hedge yourself against the exchange rate risk. Please.
Zachary Sunninen, Reuters, and then Bloomberg, please.
Thank you, Zachary Sunninen from Reuters. When you refer to an extended period of time, could you give us a little bit more firm guidance on how long that will be? Is it at least 6 months, at least 12 months? Could it be much longer? Could it be years? And also, what would really have to happen for you to drop that policy? And how will we know that you're about to drop that policy? Related to that, was this decision unanimous? And why is it that you thought that this was the best possible way of giving forward guidance of the many that you said you discussed today?
Well, I said an extended period of time is an extended period of time. It's not 6 months, it's not 12 months, it's an extended period of time. But that, no, I didn't say that. Together with that, with a sense of length of the time, you also have three sets of economic variables you want to look at. and that is the medium-term outlook for inflation, that's the economy, and that's the monetary dynamics. Monetary dynamics means monetary aggregates and credit flows. So you, in a sense, what the Governing Council did today was to inject a downward bias in interest rates for the foreseeable future, linked to the assessment of these three sets of variables. It's and the decision was unanimous. The decision was unanimous. That's also quite important.
Stefan Riecher, Bloomberg.
Stefan Riecher, Bloomberg. Good afternoon, Mr. Draghi. I didn't quite get it. The unanimous decision, was it just on forward guidance or also on interest rates? If you could elaborate, please. Second question, with this new forward guidance policy, does it change anything about the extent to which your mind is open about other policy measures? In particular, the negative deposit rate. Is it still on the table? Is your mind still as open as it used to be? Or does forward guidance change anything about that? Thank you.
Thank you. Let me say that on the first question, we had an extensive discussion about a possible interest rate cut, and we went through a series of arguments, some in favor and some not so in favor. And in favor, well, I can just mention some of them. On one hand, we had some monetary tightening in the main monetary variables. We also had weak monetary developments, as I have mentioned in the introductory statement, both in M3 and in the credit flows. On the other side, we've seen that our baseline scenario, which foresees a gradual recovery by year end, seems to be gradually confirmed by the coming out of a variety of soft indicators on the positive side. So there were several reasons one way or another. And after this extensive debate, we basically unanimously agreed about this forward guidance. Let me add also one thing that perhaps was asked before. 50 basis points is not the lower bound. I was asked, I think, by someone before this. And whether this leaves our minds open about cuts in other key rates, I think I hinted at that before. The sentence says key ECB interest rates, including the rate on the deposit facility. Also, I should add that liquidity will remain ample. And in this, I will confirm what we said last time and what some of us also said in various public statements. All in all, we said our exit is very distant.
You did not answer the second question on the negative deposit rate.
I think I said that. I said that this is... Okay, I'll say it once more. I said the Governing Council expects the key ECB interest rates to remain at present or lower levels. When the key one of the key ECB interest rates, it's the interest rate on the deposit facility. So this decision, this forward guidance, does not preclude our minds about that. We keep an open mind. We are technically ready, and it's been basically included in the options we have in the future.
Jean-Philippe Lacour, Les Échos.
Thank you. Good afternoon. Good afternoon. I feel that this is a quite historical moment today because we've been told 10 years or more ago we never pre-commit. So your predecessor said this, and you took
Myself
this expression.
Too.
Yeah.
Yes.
So you explained us the underlyings of this decision, but it's quite. Why this move today? The timing. Almost we have not an acute crisis, you know. And the second question, maybe to Greece, what is your opinion regarding some expectations on the market that maybe the Greek debt should be restructured for a new time in terms of a haircut, because it's only way the Greek deep to be kept sustainable. Thank you.
Well, on the second question, I would say that a review is currently underway, so it wouldn't be appropriate for me to comment on speculations regarding the outcome. Greece will continue with its economic policy. It has achieved significant progress. Just compare the situation now with what it was 2, 3, 4 years ago. So I think we have to acknowledge this progress. On the first point, we do believe that we have an outlook, an assessment of inflation in the medium term such that it would justify this new way of communicating our forward guidance. This justifies this new way of communicating a downward bias in interest rates. Thank you.
Jack Ewing.
Jack Ewing, International Herald Tribune and New York Times. Going back to the 3 pillars you mentioned that will be guiding monetary policy, would I be mistaken to think that you're putting more emphasis on the economy that maybe you have in the past? It seems like for years we've heard about inflation, and now you're talking a little bit more about the economy. And secondly, what would be the economic indicators that perhaps would be most important to you? Unemployment, GDP, maybe you can give us some, elaborate on that a little bit. Thank you.
Thank you. Well, I would stress that our objective is to maintain price stability in the medium term. Now, I stressed several times, price stability goes in both directions. That is so the economy is in a sense part of this. We at the ECB have always viewed the growth as based on price stability. And so we look at inflation, we look at the real economy, we look also at monetary dynamics. And this is part of has always been part of our monetary policy construction. It's the 2 pillars, what used to be called the 2 pillars construction. I wouldn't want to dwell exactly at this point in time on which indicators, which precise figures we'll look at. Thank you.
Rolf Benders, Handelsblatt.
Rolf Benders, Handelsblatt. Good afternoon. Just one short follow-up question on what you just said. You said you do not want to elaborate right now on which figures are you looking at. So did you discuss whether you would like to tie your forward guidance to specific figures, and if so, could that happen in the future, that you give more specifics on that?
I can answer about what the Governing Council feels today. I think the Governing Council feels like it has already undertaken a very significant step forward, and frankly, it's too early to speculate on further developments in the communication now.
Thank you.
Brian Blackstone, Wall Street.
Brian Blackstone with Wall Street Journal. Can you just give us a little bit more of a flavor of what's happened in the last month in order for you to change this assessment, to do this new communications strategy? A month ago, you were talking about what a conservative central bank the ECB is. You were talking about the benefits of low inflation. You can buy more stuff. And now you're kind of going in a different direction, at least on the communications front. And to what extent did the activity in the bond market, especially since the Fed's tapering discussions, affect your decision-making? And is there a risk that central banks around the world, including the ECB, are going to be too influenced by developments in financial markets when maybe the markets need to be finding a new equilibrium given the recovery in the global economy? Thank you.
Thank you. Well, really, what happened in the last month is the monetary tightening that has taken place in various segments of the interest rate curves. And that's really what happened. And in presence of a, by and large, continuing weakness of the economy, in spite of the new soft indicators, which seem to point out not to a dramatic improvement, by the way, but to a slower worsening pace of the economy. I'm sorry, as lower worsening pace of the indicators themselves. In other words, the economy is still going down, but it goes down to a lower pace. I think that's what happened, and so that's what made us think about. We are not reacting to other central banks' monetary policy decisions. We certainly want to clarify as much as possible what our assessment about the medium-term outlook for inflation is and what our reaction functions are.
Michael Steen, Financial Times.
Thanks. Yeah, Michael Steen, Financial Times. Mr. Draghi, just following on from that, the statement does explicitly said, and you've just repeated it, that the recent tightening of global money and financial market conditions and related uncertainties may have the potential to negatively affect economic conditions. So maybe I'm being simplistic here, but given that that was all caused by the Fed's communication over tapering, it now seems that you're reacting with your own communication to the communication of another central bank. So to me, that looks a bit like you're following on from them, or which is not to ascribe any kind of blame or agency to it, but purely to just look at what's happening. I mean, that's the only thing that's economically changed, and the markets have then reacted to that, and now you find yourselves having to react to that, it seems to me. Second question, I think you already know it, it's becoming traditional, OMT legal documentation. I can read you what you said last month, but I'm sure you can remember, so where is it? Thank you.
Okay. Yeah, on the first question, really, we are acting in the euro area monetary policy jurisdiction. We look at what the monetary developments have been. We look at the inflation outlook in the medium term. We look at the state of the economy. We look at credit flows, which continue to be weaker and weaker, and we take our decisions. It's not that we react to other central banks' communications. We simply react to what we see changes in our medium-term outlook. One of the points of discussion is how do we best react in front of an increased volatility, not caused by our own actions, but by something else that's happening in the rest of the world. Is it going to be a transitory change? Is it going to be just short-term volatility? Or are we in presence of significant, permanent changes? And that is what justifies our forward guidance today. So this is what that's the answer to your question. As I said before, during the discussion about interest rate cut today or not, many of these reasonings have come out. And that's why the decision to give this unprecedented forward guidance was unanimous. The second point is OMT legal acts are ready when OMT is ready to be activated. What is the benefit of having it now? People are working on that, by the way, so I'm giving you the same answer as last time. I won't say, no, I'm sorry. I will say, that's what I said. I mean, they're going to be ready when they're ready to be activated.
Okay, well, that's a valuable clarification. So you publish it when someone applies for OMT and not before?
Yeah.
Okay.
Probably.
Probably.
You see, there is no, I mean, I understand now it's becoming, you've been very good in making a dull question a sexy one. But in fact, it's not a question that is really comes first in our priorities now. Or better, the answer to your question is not one of our priorities now. So OMT is ready to be activated, it's there. When it's going to be activated, the documentation will come out and be published. Thank you.
Marika, Corriere.
Yes, Mr. President, Portugal yesterday was attacked by the markets and there was a political crisis is going on. What is exactly the problem? Was there too much austerity, or what should maybe Portugal do more? And then you were speaking of some risks around surrounding the euro's strength. Do you think that at present does it disturb you? I know that you don't have any monetary, you don't target any the euro value, but you were speaking. Would you maybe clarify what you mean when you speak of risks coming from the strength of the euro? Thank you very much.
Well, I'm not sure I actually spoke about risks coming from the strength of the euro. But on the second point, as I said several times, we don't have the exchange rate as one of our policy targets. We do believe that the exchange rate is important for price stability and for growth. We also believe that exchange rates are not a one-way affair, that you simply click something and you change the exchange rate, but the exchange rate is determined in the marketplace. There is a G20 statement that makes reference to exchange rates, and I think I would stop here. What else you said? You asked about Portugal.
Too much austerity?
I think Portugal has achieved very remarkable results. It's been a painful route, and the results that have been achieved have been quite significant, remarkable, if not outstanding. I think we should give credit for this to the government, and especially to Minister Gaspar, who's just resigned. We're also reassured, by the way, by the new minister, by everything we know about her personality. She's been a constant attendance at Eurogroup meetings. So from this point of view, Portugal is in safe hands. I wouldn't comment on the political developments in Portugal, because also, by the way, it would not be my job to comment anything about that, but it's also there in their making. Thank you.
La Stampa, Tonia.
Mr. Draghi, don't you think that there is a dangerous mismatch in the banking unions and the progress has been made? Because you're going on with the supervision, and you will start to analyze the balance sheets, I think, this winter of the banks. But at the same time, we have no idea when the single resolution supervisory mechanism will be active, and the backstop, which is asked now to the governments, is asked in a very difficult moment. The governments have, many governments are in a deep recessions and have to fight with this. So for them, it would be maybe very difficult to build a backstop for banks who are in trouble. Don't you think this is dangerous?
Well, it's not really danger. It's something we have to have in our agenda. In other words, the SSM will have to be in place, and the single resolution mechanism will also have to be in place for both of them to be effective. I think considerable steps have been achieved by the meetings of the ECOFIN and even by the recent European Council. On the backstops, I've said several times that we don't want to repeat the mistakes of the past. If a jurisdiction, if a country, if a monetary area embarks into an asset quality review or a stress test or any examination of the state of health of a banking system, the result of which could be to identify capital shortfalls, it's absolutely essential that both markets and the supervisors and governments know what is going to be done about these shortfalls. We cannot undertake exercises without having an answer to what happens if we identify capital shortfalls. So it's absolutely vital that backstops be identified ex ante before we undertake these exercises. That's what I think the European Council has acknowledged in its conclusions. And So I'm pretty confident that we will not repeat the mistake we made 2 years ago. Thank you.
FAZ, Herr Plicker.
Mr. Draghi, the finance ministers have agreed that the ESM should be just the last resort for means of recapitalization of banks, and they agreed to have a cap of, at least initially, 60 billion euro for that recapitalization from the ESM. Do you think that will be enough, or is it just a too tiny sum?
Let me just comment in general on backstops. You have, and we had to go through this just because of what I just answered a moment ago. We have several backstops in principle. We have the national backstops, and we have the possibility for countries to apply for an ESM program. An ESM program means that the country, like Spain, for example, is a good example, would get money from the ESM in order to recapitalize their banks within an ESM program. And I think the outcome of this exercise, incidentally, has been quite satisfactory and could actually form a good example. And the third backstop is the ESM Direct Recapitalisation. Now, so far, my understanding of the discussions that are taking place in the Eurogroup is that this ESM Direct Recapitalisation would become available only after the ECB has taken over its task as the single supervisor in the area. So for the time being, this would not be available as a backstop ex ante, that is to say, before we are going to undertake the asset quality review. On the precise amount, I can't really make any comment on. First of all, because it's a decision of the member states. Second, because it's a decision that has to be calibrated vis-a-vis the eventual shortfalls that may come out. But as I said, 2 other backstops are potentially usable to meet the shortfalls that may emerge from the asset quality review. One last word on this. People think that, well, not people, some people think that as soon as there is a shortfall in capital in the banking system, immediately these backstops would be used. But that's not the case. When there is a shortfall in capital in a bank, the first thing is that what the supervisor does is what's called supervisory action. Namely, they ask the shareholders to put the private shareholders to see whether they want to increase capital. Then they would ask the bank to see whether they can sell some parts of the bank or merge the bank and so on and so forth. So there are several actions that are normally undertaken before one even thinks about using a backstop. Thank you.
Marc Schröers, Börsenzeitung.
Yes, thank you. I just have a quick question also on the OMT, as we're almost 1 year after your famous whatever it takes speech. I think it was also aimed at giving the governments time for fiscal consolidation, strengthening the competitiveness, strengthening the framework of the euro area. Are you satisfied with what happened during the last year? Are you frustrated that there is not much more progress? For example, if you look at banking union or structural reforms. Thanks.
Thank you. Well, I have to say, first of all, it's whatever it takes within our mandate. Second, the OMT was not really addressed to supplement government's action, to substitute for government action. It was conceived, designed, and meant to address tail risks in the euro area. So it's not right to say that OMT has decreased the incentives. These are what I call the heroes of the counterfactual. If there had not been OMT, then all governments would have behaved very well. We would have a banking union in place firmly now with the 3 pillars already decided and legislated. Now this, I mean, it's counterfactual, it's a great luxury, but let's look at the facts. The fact is that OMT has produced widely today, I think, universally acknowledged benefits for everybody, and that's it. Now, if governments, there have been governments which have used their time well and others less well, but it's completely their own responsibility. It's not that OMT has in any sense changed things. OMT was addressed to other objectives. Thank you.
Hi, Mr. Draghi. Estelle Péard from the Agence France Presse, AFP. Portugal is going through a political crisis, as you know. Do you think it could benefit from the OMT program?
OMT conditions are known. You know what the conditions are, and I'm not going to repeat them today. You know what the purposes of OMT are. I just said it's meant to address the tail risks of the euro area. So I stop here.
Thank you very much. I think for the first time within an hour, we've actually exhausted all the questions. So thank you very much.
Thank you. Oh, there's one other question there? There's one.
Okay, one more then, Jean-Philippe.
Just a follow-up question regarding the character of unanimity to this new statement for pre-commit. Sorry, the statement we are pre-commit to. Yes, unanimity within the Governing Council to for an extended period of time keep interest rates at level or lower. I'm a bit surprised because we from the side of Bundesbank, for instance, the president said in some interviews that it is dangerous to keep rates so low level for a long time. So. And then you have this discussion. So
the discussion. Look, the decision was unanimous, and it was taken by all. And we had a big discussion, as I said, about interest rate cuts today or not, but not about this. Having said that, I think we all agree that low levels of interest rates entail serious risks for financial stability. We would all agree there is no disagreement about that. But at this point in time, we don't see these risks, and we see all the factors that have led us to express this new forward guidance that I mentioned before. Thank you.